Patron, take them away.
Okay, boys and girls, I'm going to go to market shortly, and the market of choice is USDJPY. There is the Fed tonight, so I don't really want to be in the markets any longer than I have to be. It's a simple setup, and I'm looking for 50 quid-ish. And I know some people will go, 50 quid, is that all you're doing trading? Oh, that's not very good, is it? Better than you. Why? Because I'm not fucking stupid. 50 quid is 10 pip move on a fiver a point. Now, first of all, fiver a point, you don't need a great deal of money to trade at a fiver a point. You don't even need a great deal of money to trade at 25 quid a point. The difference is, if you get it wrong, those sizes can wipe an account out. So you've got to be a little bit mindful. If your account is relatively small, keep your position small. You've got 10,000, 20,000 in an account, do a fiver, do a tenner, do 20 quid. It's not a problem as long as you respect it. And I think a lot of people don't. And this is why the prop industry blows up quite a lot. They see this big number, but they forget about the drawdown. So they size to the big number, and the drawdown can't take it and just wipes it out. So you've got to be a bit careful. And a lot of these things that I talk about come from the way I'm spoken to. See, I don't script anything, boys and girls. I just grab my coffee, because we all know Scruffy likes it coffee. And if you like Forex mugs, do check the shelf below. It's Joanne's little business. It does help her. And stuff goes to good causes and stuff like that. And keeps her busy. Anyway, enough of that plug. Nah, I will plug it. Get yourself down there. Get it bought. She cries when she doesn't sell anything. And then I'll get it in the neck. Nah, she loves it. Keeps her busy in one thing and another. But let's get back to this quick talk while I'm looking at the chart. I'm actually wanting to go long, and I'm just watching it, and it's pushing down at the moment. Your size of the account, or the sizing of your position, is incredibly important. Most people are just sort of trying to hold a trade too long. The market's not willing to give it to you. So you're trying to get 200 or 300 quid out of a chart on a pound a point. Well, that means it's got to move 300 points. So you can do one of two things. You're in and out the markets like a maniac, which I do not recommend. Once or twice a day per product is all you need, because it'll only give you one or two opportunities a day. Now, jumping from multiple assets is a problem. So scale it back. Maybe you only look at 2 or 3, 5 max. There's an old strategy. It's 5-3-1 strategy. 5 products, 3 strategies, same time every day. What that means is you are looking at 5 assets to give you choice. You will have different conditions in the market. You will have uptrend, downtrend, consolidation. Now there's also 3 types of main trading: scalp, day, and swing. You just pick which strategy you need for the product on the day if you're looking at it at the same time every day. So if you can only trade at 9 o'clock every day, and you look at the chart and it's not ready to go, and you can't see a scalp, by definition it's a swing. So you put a pending order in where you think it's going to be, look at it again tomorrow. You look at it at 9 o'clock and it's almost there. You can see what's going on. Fine, it's a day trade. And you spend the next 20 minutes, an hour looking to get in, enter your market, away you go. And if you can just see a bit of volatility coming in, then you can maybe scalp it. And then you do it, like I say, same time every day, 5-3-1. It's a simple way to trade, and it's a way of keeping your mindset in check. But again, it hinges on the position size. If you've got a position that is only 50p or a pound, just keep figures easy, and you're looking at, say, euro dollar, and you want 300 quid, that ain't moving 300 pips in a day. It'll move 90 at best. And then from that 90, are you going to get the top and the bottom of the market if you're going short, or the bottom of the market and the top if you're going long? Chances is no. So divide that by 3. So your original 300 was blown out of the water straight away by looking at a daily ATR, which is telling you it's 90. So you're already on the back foot if you're trying to do 300. You look at what the daily ATR is. So right, okay, 90 is your baseline. I've just established you're not going to get all of it. So therefore, divide it by 3 and look for a third of it, which is 30 pips. And then do that a couple of times a day by dividing it by 3 again. So if you divide that 30 by 3, that'll give you a baseline of 10. So if you do 10, 2, 3 times a day, there's your 30 pips. If you're lucky to hold it for 30 pips, outstanding. But work from a baseline. Keep the target realistic. And don't look at the money. If your account can only take a quid, it means you're only getting 30 quid. Be happy. Do it again tomorrow. You might be able to put £1 and 5 in. Compound your position size up. Little things to think about. Anyway, let's jump on this chart and we'll see. Now, I've fully marked it up. I've already been into Discord and done the markup for them. They can see it all here. So it's gone in. Now, not only from there, I'll go a little bit further because it's actually here as well. And as you can see, it's on getting prepared as we speak. But I actually put this in for them as well, and it's here. So what it's telling me, sort of at 10 to, it's now 10 past 2, and I'm kind of ready to go into it. It's saying it's a C trade, so by definition, I'm going to be really careful with it. It's telling me about 12 pips. It's also telling me what the main direction is. The main direction is buying this thing. But at the moment, it's selling off. So I have to decide whether I'm going to do a quick scalp as a sell, or I'm going to wait for it to buy out. Well, that's what we're going to have a look at now. I might even go both ways, you never know. But at the moment, this is pushing down heavily into here. So if I want 12 pips, and I've established what the directions are on the various hours, well, there's 19. That's my next stall point down here. So let me take this out to an hour so I can have a look to see what's going on. Well, there's clearly this move here. Okay. So if I draw that base to base, okay, and I just drop in what's called entry exit points. And I often put these in blue. So if you see them in blue, all it means is they don't hold a great deal of weight, but they are low time frame bouncing points based on a major move. Well, I don't think you can look at that drop and say that is not a major move. Now, the 50% of that mark also lines up with a key Fibonacci from another time frame. So that makes this quite an interesting chart. Okay. So I don't need that no more. Quite happy with that. And it's pulling against this here, pushing down. Now, the longer it stays above that 50%, the more chance it's going to go back to the higher ground, which means it's coming here. The problem with this market is this. Let me show you. It's massively high. It's screamed up, it's come down, it's pushing, and it's pushing, and it's consolidating. The question is it going to pull against this back to center ground? Because that's kind of indecision. It doesn't really show you anything, but then the buyers are back. Let's Just look at the weekly, see what's been going on here. Again, the weekly was full of indecision. So this could easily squeeze back up into these regions. And then if we take it into a monthly, again, we're starting a new month and it's starting green, although it did end with a tail. Does that affect what's going to happen in the next 10 minutes? Of course it doesn't, but this will. So what I'm going to propose to do is I'm going to sell it down into here, but I'm really looking for buys. Okay, so take that up to there. I can see it. It's starting to accelerate now as we speak. I only want about 10 pips, so I'm going to put an order underneath it for 10. Just like so. Boom. So that's my order in. And there's 10 pips. So if it gets into there, that's only 8. So we'll drag that down onto there. And ideally, we are looking to get onto this. Okay. There was no point doing a candle count on this because it's accelerating down quite aggressively. Now, one of the issues we have here is this market is quite stretched, pushing down, but it's got so much gusto running. I think it does have a high probability of coming here. So what I'm going to do is I'm actually just going to follow the candles up. So if that turns around, goes green, 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 I am going to follow the short till it gets to roughly around this area here, which is a cluster which marries up to that. Okay, so let's have a look. But as you can see, that is quite a significant move, but it's rolling over. And that rollover can be what's going to pay me. Now again, what I can do is I can do this. I can actually put some extra entry exits in based on this move to see where we are. So if it is going to bounce, it could potentially be these ones. So that and that running into this 50 are also pretty viable. 15 minutes. Right, okay. So there we are, mapped out. We are targeting the yellow line, which is about 15 pips. And we're going to see if it busts through here. When it busts through that, I'll pull the stop in. Stops are higher up, obviously. And we'll see what goes on. But we'll look at that all when the market enters fully. I'll just play it and I'll come back to you at the end. Okay guys, that's it, job's done. Quite happy, hit the wages for the day. Don't need to do anything more. It is starting to struggle in and around this area. I'll start putting on indicators, you'll be able to see why. It's very stretched all over the place and you need to be a little bit careful when it gets to a situation like that. It can truck down, but equally, because I know this is a danger area, which is why I've marked it in, it can easily just burst and turn around and go the other way. So you've got to be a little bit careful. No tickets, no odds. And there you go. Ah, boom. Bummity bummity bumbots. I genuinely thought I'd hit my 200 quid, but for 350, I'm not going to go back to market. It's just a bit daft. Bugger. Damn and blast and buggery and I better have a coffee and oh god, we know Scruffy likes a coffee. Fucking hell, I hate that bastard. I have a little bit of OCD, guys. I like round numbers and things like that. It's maybe why I'm reasonably good at what I do, because I do have an OCD. I mark my charts very, very particular in a particular way. I look for certain criteria in a particular way. But it's not X marks the spot. In fact, let me just touch on that before I close this off. In trading, and bear in mind, I've been in this industry 19 years this year. And it's been my solid full-time career for a very long time. It can bring you a good wage if you can see the conditions and apply common sense. Now, to me, the common sense is this. The market can only do three things. It'll go up, it'll go down, it'll go nowhere. So if it's going nowhere, you can write that off. So you're essentially at 50-50. If I put my levels into place, chunk, and I've got the price trapped between two of them. So if it's on one level, there's certainly going to be a level higher up, certainly going to be a level down here. And if you've got two levels and the price is in the middle, again, it's going to hit one of them. All you have to do is decide the direction. So it's common sense. Now, from that, you just look at the big picture. Look at your high time frames. Look at your daily, your 4 hour, your weeklies, etc. What's the market trying to achieve? And then just go with it. That's it. But if you're looking, oh, well, this moving average crossed that and an RSI did this and okay, MACD did that. Good luck. There's a good reason a lot of people fail, because they're looking for these elusive holy grails. If they exist, you would never have a sniff at the chart, ever. Because the big boys would just destroy you all the time. You can't. You've got to read a chart. That's the difference. Reading a chart is a lot different than looking for X marks the spot. Anybody watching this that's looking for the perfect system of X marks the spot and they want to be a scalper for 2 or 3 ticks, wasting your time. Absolutely wasting your time. You will lose more money on the search for that than anything else and probably lose your mind in the process. But if you look at it as a framework, I'm going to go from this point to that point, and you target effectively, you're in with a shot. Hope that kind of makes sense. Anyway, I'm happy with 50 quid. I'm happy with nearly 200. I can do with that. And if you think about it, you do 200 quid a day, 5 days a week, £1,000, 50 grand a year with a couple of weeks off. It's not a bad way to live, is it? Just a thought. Anyway, as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.